Welcome to Trends with Benefits, a podcast by VanEck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
Welcome to another episode of Trends with Benefits. And wow, the beginning of 2021, the Bitcoin bonanza, the craziness in crypto, it's really taking off. And it was just fortunate timing that we put together plans to speak with my guest today towards the end of 2020 in December. And I feel terribly lucky to be able to talk to somebody who's been watching the cryptocurrency markets now since 2014, or perhaps even earlier. We'll talk about that. And I'd like to welcome Charles Hayter, co-founder of CryptoCompare, which is a global cryptocurrency market data provider giving institutional and retail investors access to real-time, high-quality, reliable market pricing data on thousands of coins and currency pairs. Charles, thanks for joining me.
Well, thank you for having me. Nice to be on here, and especially actually today is our 7-year anniversary of founding the company. So it's quite a special day. And over those 7 years, we've seen quite a lot of the market and how it's changed and been there along the journey.
It's been an exciting beginning. I mean, we noted, as you and I were talking about this, it started to really kind of take off again late December of 2020. And do you have a sense from your prior experience in this area that this could be the year for crypto, for greater adoption, that there's something more longer lasting?
Yeah, I mean, I think the real key to this has been the institutional money that has been the spark that has lit the fire, that has then sort of caused the run on prices, which has driven retail interest again, as news interest has been sort of seen an uptick. But I mean, perhaps the the key announcement from a long-term conservative hedge fund that came into the market was Ruffer, perhaps in their fund, noting the 2.5% allocation towards Bitcoin. And for quite an old conservative fund to do that is interesting. The way they phrased their Q4 note really is quite they describe Bitcoin as being the perfect asset for this strange time. And I think that sort of rings true if you look back at history and look back at what tends to happen in these cycles. And so Bitcoin is coming to the fore, being a flight to safety from perhaps overzealous taxation by governments and inflation.
Let's take a step back. So you started CryptoCompare with your co-founder in 2014. Is that right?
Yeah, so 2014, I think December 2013, when the price started moving because of the Chinese not being too negative against Bitcoin. Watching the prices move, and I thought, this is interesting. There's something happening here. And gave Vlad a call and said, should we get going on this and set something up? And he worked at a stock information website. And I'd been working in the city as an analyst before that, doing the CFA.
So you were in traditional finance prior to this?
Yeah, so I was an equity analyst at a small boutique covering Asian stocks and sort of thematic investment in quants and solar and various other emerging technologies.
When did you first become acquainted with Bitcoin and cryptocurrencies?
I had a friend who, since 2012, was saying, this is interesting. And at first I fobbed him off and said, this is ridiculous, it's nothing. And then, as everybody says, they talk about the rabbit hole. Well, I plunged straight down it. And and it's been 7 years now. Yes.
So what was it that you saw about, I don't know, was it Bitcoin that really pulled you in, or was it something just the blockchain? What was it that you saw that pulled you down that rabbit hole?
The first thing is the frictionless nature of transferring value. And I think everybody's first of all pulled in by the rapid price moves. And that's obviously quite exciting as a sort of speculator to some extent. But then when you look under the hood of the technology and how it interplays with Bitcoin itself as a self-sovereign currency to some extent, and the previous historical sort of issues with eroding savings, and the whole thing comes together quite nicely, and you realize that this is actually a little bit of a breakthrough. It's sort of piercing the veil to a new arena, I think, and that's what this digital value transfer does. The same thing as we saw with the invention of the book, or we're seeing with the invention of the internet, of how information flows. Now we've got quantized value flowing. And that's quite a sort of an innovation in itself.
How did you come to the idea of starting CryptoCompare?
Well, I was looking at a couple of competitors' websites out there, and the information was quite difficult and things weren't bucketed correctly. Being an analyst, you get quite fastidious about sort of Excel spreadsheets and bucketing things correctly and want to know exactly what data flows where, because that's where you get the real granular information about how to make decisions. And so that was the initial premise, was to start recording all this data, to have the data sets at the beginning of time, build a front end to advertise the data, which is our website. It's quite retail friendly. But we knew that in the long term, as this migration across to digital assets occurs, whether it's fiat currencies or stocks or Bitcoin itself becoming accepted by the mainstream, there's a sort of dual crossing from incumbent and from the crypto world itself to the incumbent world. We wanted to be at that nexus, and that nexus is data. And as we're starting to see now, the data market is starting to pick up, and we're seeing a lot more institutional clients come and wanting the full data feeds, as well as the traditional crypto ecosystem, where we have circa 300 clients on who are powered by our data because they trust it, because we're an independent, reliable source.
Is it just pricing data, or is there a whole set of data behind that?
We believe that there's 5 pillars of data in the digital asset ecosystem. And the first is pricing data. Then there's order book data. There is social data, and there's sort of static entry data, which is your descriptions, your just general facts and sort of non-changing data. And then there's blockchain data itself. We have, and blockchain data is very important as well, because it allows you to, in a sense, count, like in the old days, you used to send analysts out to sit outside the factories, and they would count the number of lorries going in and out, and that would give you a tally as to the revenues or the profits of the company. And blockchain data is very similar in the sense that it gives you an early warning signal of the flow and flux throughout the ecosystem. And that can be very useful, as we're seeing with on-chain movements, off-chain movements, etc., to exchanges. But the whole set of data together comes together to provide a holistic whole. And that's where you really drive and add value for clients, because clients will have multifaceted strategies. And as they're using these multifaceted strategies, they need clean, reliable data feeds that allow them to innovate and make decisions that they think will keep them ahead of the curve. And that's what our driving ambition's has been to drive revenue growth and sort of EBITDA growth for our clients.
What is the ecosystem for cryptocurrency right now?
So the core of the ecosystem is the exchanges, really, and they're the ones who are making a lot of money, and they can be set up in any jurisdiction, although there are some exchanges that are better than others by a large degree. And obviously then it's very similar to the traditional markets, but you do see some lower costs, and the lower costs are because of the lack of capital infrastructure, I'd suggest, and also the ability to code a lot of what is not coded in other organizations. So the digital asset ecosystem is a lot lighter weight in how it's structured, but broadly it's very similar. You do enter certain topics such as DeFi, and then again you're basically passing a lot of the infrastructure onto cloud infrastructure and onto a network. And that is, again, a cost reduction. So it's, again, these frictions being reduced by technology.
Now, there are a ton of exchanges out there. I'm just going to reference Bitcoin again. There's a ton of different exchanges that one can trade Bitcoin. Is that one of the reasons to index a Bitcoin price?
Yeah, I mean, there's a lot of variation in pricing in the ecosystem, and people need a settlement reference rate to work off. And that's an important job that various companies have done in the past in the traditional ecosystem, and that's what we're doing in this environment as well. That just takes a lot of internal IP of just knowing the ecosystem and what to do and how to formulate a price, because of the various vagaries and nuances that the ecosystem naturally has.
What are some of the difficulties of sourcing data and calculating an index?
So we've been doing this 7 years, and we've been basically salted by the market. That we've faced a lot of problems and evolved with it. So we've seen quite a few of these price dislocations, outliers. And so what I mean by that is one exchange will suddenly move rapidly out of the pack of others. And that might be, for example, with Mt. Gox, due to the sort of withdrawal issues. So you sort of have trapped money, which creates a price disparity. You might see one of the exchanges go offline, and people might be using it in their VWAP, but not accounting for the fact that its last traded price was maybe an hour ago, and therefore it's not fresh. So the way that you have to evolve your reference rates to, for example, when Coinbase had a down period last week, we, in our indices, well, our reference rates, if it doesn't trade for a certain period of time, we reduce its weighting in that specific price. And so if a market on one particular exchange goes offline for a particular reason, then the prices naturally follow the true price of the market. And that's how we've adapted towards it. There are various other issues such as localized arbitrage opportunities, and these sort of price dispersions that occur globally. It's similar to, for example, in 2017, there was the Korean kimchi premium, which is at about 50 to 70%. In Japan, you had similar sort of peaks, and this was due to the way that those countries structure the flow of money in and out. People found some very innovative ways to take advantage of those premiums by using credit cards to buy cross-border transactions, which would allow them to buy Bitcoin cheaper and then sell it on their exchanges. But the markets have matured a lot since then, so the price dispersion is reducing, but you are seeing volatility clustering when you have high levels of interest and demand.
How many different Bitcoin indices are you calculating?
So we do, with yourselves, we do about 40 different products, I believe. And these range from have various methodologies behind them. There are various private clients that come to us for specific methodologies that we naturally, obviously, love to build. Those are the 40 indices. We also have some reference rates that we're trying to get regulated in the UK that rely on our methodology. And that methodology is reliant on our exchange benchmark, which is where we grade exchanges.
In the very basic sense for creating an index, a Bitcoin index, and you're looking at all these different exchanges, you mentioned weighting an exchange. Can you talk through how you incorporate data from one exchange versus another exchange, and what might happen over the course of the day in terms of how you weight them?
So what we do is we have three factors that go into our aggregated price. The first factor is what percentage of the market the exchange has, so over the past 24 hours. And so if it's, for example, VanEck or Bitstamp, we allocate their percentage, so it might be 50% or 20% of the market. So that's our VWAP element. We then have the time-weighted series decay. If the exchange has stopped trading for a certain period of time, we start to remove it out of the index so that the price tends back to the prices we're actually seeing on a live trading basis. And then the third factor that we include in that is we have an outlier detection methodology, which if a price goes above a certain standard deviation away from the rest of the pack or the average, then it gets excluded. We also filter certain exchanges out that we consider not to be meeting a certain standard that we do on a 6-monthly basis. And that's where we sort of communicate with the exchanges, and we try and push standards across the board to make sure that there's just good governance and good practice.
So you are talking to some of the exchanges. Do you find different levels of openness?
Yes, naturally, there's a huge level of difference of openness between the exchanges and willingness to cooperate with us. And we believe that I think the Bitcoin phrase is virus and numerous, but strength in numbers and working together is a very important sort of part of how this ecosystem can develop for everybody's benefit, and that's by sharing knowledge and being transparent and good business practice, basically.
Over time, have you noticed a decline in the deviation between prices across exchanges?
Yes, there has been a huge decline in. We call it dispersion. So if you imagine it's probably an old being a physicist at university. This is kind of going back to sort of how we look at it. We look at light rays, but the prices sort of do come together a lot more. Naturally, there are risk premia for certain exchanges or trading fee premium as well that sort of work into the price a little bit. So the costs are sort of incorporated sometimes in the price. And then you have certain jurisdictions. So the US might be a nice narrow market without much differentials between the pricing. You might see differentials between the US market on average and the Korean market or the Japanese market as you have localized disturbances in the price. And so that's where back in 2017, 2018, we saw those kimchi premiums. But now premiums are maybe between 5% max, 7% maybe. We've seen every so often. And then obviously you get other discounts, for example, on Tether USDT, which is run sort of related to the company Bitfinex but an independent company of its own sort. But it has had dollars issued on the blockchain. And sometimes these tethers, when stories get to the market, you see people worried that they're not backed one-to-one, and that there's a sort of form of credit risk. And so they, again, those price premium can move up and down. So it's quite an interesting, you've got to know the insights of the market, insides of the market, to understand where these opportunities might occur.
Can you talk a little bit about your client base? How many different clients are you working with, and do you have a sense of more institutional or the different types of clients that you have?
Yeah, so the really it's a broad church. So we have clients from every facet of the financial industry, and on the one end of that, it's an individual who's trading for his own account and wants to connect to an API to write his trading bot off. On the other side, it's a high-frequency hedge fund that needs to have our data feeds, or a market maker or an OTC broker who wants to just see what our prices are saying, or work out or drive strategies on the back end of it. And then in the middle, we have a lot of apps are powered by our data. That might be Ernst & Young's tax app. It might be, for example, a lot of the crypto native apps that people have on the App Store are powered by our data on the back end. And this is where our API is probably our crown jewel internally to what we create, because it has about 20 to 30 million calls per hour on it, which come from about 3 million unique users per day, about 800,000 per hour. And these are unique IPs, either sort of opening a wallet or a large client. They take some feeds from us, and that's quite a heavy load on our servers to forward that data out. And then through to other various exchanges in the crypto ecosystem, such as Coinbase and et al. And there's a lot of them that take data from us in that respect. One thing that's interesting we're seeing at the moment is a lot of we have met various regulators around the world, from their financial stability departments through to large organizations such as the ECB or the Bank of International Settlements. And they are quite keen on these data sets too, because they realize that, Bitcoin is not going away. And so they need to have these data sets as part of their system to analyze it properly. And where best to go? CryptoCompare for a reliable data set on that.
Is there a common theme amongst the regulators in terms of what they're really trying to get at? Is it I don't know, transparency or understanding the validity of the pricing?
It's a mixture, but it depends which department and what angle they're particularly tasked with. But it's from financial stability, we need to have a look at this asset, from price movements, looking at trades themselves, and the market integrity, which I think is going to become more and more important as we go forward. Obviously, that market integrity element leads through to what kind of products can be built on what indices, which then allows the drive towards an ETF, which is what we're seeing a lot at the moment of, obviously, with yourselves.
I wonder if you could talk a little bit about some of the work that we've done together, VanEck and you, with our subsidiary MVIS. There's an ETF in Canada from 3iQ, QBTC. It's based on MVIS CryptoCompare Institutional Bitcoin Index. And then recently, VanEck in Europe launched an ETN, ticker symbol VBTC. It's MVIS, and it's based on the MVIS CryptoCompare Bitcoin VWAP Close Index. So different indices. I wonder if you can just maybe compare and contrast some of the differences between those indices.
It's a selection of exchanges and its closing methodology at the end of the pricing period. We did actually start off with you guys back in 2017, I believe it was, where we introduced a suite of indices that were baskets of digital assets, and that's where we initially started working together and brought forward our processes. But then we've seen a lot more demand for singular asset indices over the past 3 years, and have developed various sort of unique esoteric sort of methodologies that just work well for those specific products that need to be built on top of them. And it tends not to be the usual group of exchanges, just varying methodologies as to how we formulate the pricing behind it.
And, since Bitcoin trades 24 hours a day, do you strike a closing price that it's typical of other markets?
On the CCC Ag, we don't. It just rolls on forever in the sense that it has no close. Crypto never sleeps, I think. That is one of the vagaries of the market. That means that you need to have very good uptime, dual infrastructure. I think we've got about 660 servers in various locations around the world, sort of cleaning and working on this data at any one moment. But formulating a sort of close price is just about the methodology and how you think about what would be a sensible way to formulate a price at that particular moment in time. And there's various methodologies, from looking at averaging over minutes to looking at averaging over an hour's period as well. So it's or taking a certain period and taking the average of trades over that particular period across a selection of exchanges. And that's a fair way of determining a last minute price. What we're trying to get away from here is people being able to manipulate the particular window that can lead to unfair settlement pricing and and market manipulation, basically. But that's just by being reasonable and practical on how you approach the mathematics behind it.
Why do you think it's important that data providers are independent from exchanges?
Well, that's an interesting question with what's been going on at the moment. So obviously, in the traditional markets, that's no longer true. The LSE group owning Refinitiv, and then I think NASDAQ buying Quandl and having its own data arm as well. And a whole variety of companies have their various index divisions or various data feeds that they try and use as lures to tempt and encourage trading on their own exchanges. And I think that's probably more of a tool as a trend for exchanges to have other data sets that they can drive trade volume from. That said, we've seen a similar move in the digital asset ecosystem, where Binance acquired more of a retail sort of traffic driving play, less of a data play. Ideally, you would want your data provider to be independent and not to be potentially cajoled into pushing certain narratives over others. You would like them to be entirely objective. And that's what we believe is fundamental. But the truth of the world is, pragmatically, it's never really the case. There are usually divisions and multifaceted companies that have data division arms.
So, one other area of crypto that's kind of come up, and Jan, I believe, wrote about it in his No Jargon blog recently, about earning income on crypto assets. Are you doing anything to address that new area?
Yeah, so we keep a very close eye on the data sets that are appearing. And as we see, the traditional markets took, let's go back to 400 years ago to develop to where they are today, with explosions at various points, such as derivatives in the 70s, 80s, etc. So we're seeing the same thing now in digital assets, but compressed. And so everybody cycles onto the new area. And one of the most recent cycles has been earning yield, as they call it. The crypto ecosystem also uses language that is purloined and slightly differentiated from the traditional world. So you might call earning interest yield farming. And we keep an eye on these data sets as they appear. And when they become valuable, or there's a way of measuring them, or the ability to collect the data in a way that is going to be useful is there, naturally we want to be able to provide that to our clients, because that drives their ability to make better decisions.
You mentioned you were doing thematics, a little bit of thematics. Put that thematic hat on. What's one long-term trend you see playing out over the next several years? It could be about Bitcoin. It could be about anything in the market.
You've always got to look over the hill to see what's coming next and where the new industries are going to be formed. And I think data is a key one in the digital asset ecosystems. That's number one for how DeFi works and how it uses pricing. And there's been a lot of use and term about oracles. However, I think that oracles are not necessarily as reliable as they can be. I think there's probably an issue with decentralization, and we'll start to see a few errors on that front there. So I think centralized providers providing data for certain purposes is going to be, just as it happens in the traditional world, will probably be more effective and efficient. Probably the biggest trend that is going to occur over the next 5 years, maybe sort of next 3 years, is the US dollar versus the digital yuan. And I think that the Chinese command economy issued method of using government state-backed agencies to push it is going to have a very quick high-level saturation effect across the Chinese economy. But I think it might have an adverse reaction as they start to push it into various other jurisdictions. And that will be regulatory kickback from various governments. The question is how they do that. Now, the US, to counter that, has And various countries in Europe have been looking at their own initiatives. Italy the other day announced a digital euro project. But the US is in China's in the ascendancy. The US is in its decline period of a sort of the cycle of life cycle of a nation. How the US counteracts this shifting of the tectonic plates of which is a reserve currency could be quite interesting. Now, perhaps Facebook's move with DM, the French authorities were very anti what Facebook was trying to do. There was a move from a sort of an ETF-like basket of currencies, similar to Hayek's commodity money. But Facebook has 2.6 billion people, and 2.6 billion people mobilized under money could be quite an interesting concept to counter the digital yuan. That said, Facebook isn't doing itself any favors at the moment with WhatsApp and privacy issues. So there's again this interplay here, and that focal point between the US national currencies and fiat itself is going to be quite an interesting play.
We do a segment called Trend or Fad. I'll just throw out a couple different terms, and you let me know top of your head if you think it's a trend or fad.
Okay.
Mobile sports betting, trend or fad?
Trend.
Wellness, trend or fad?
I think it's a bit of both, but it's just being healthy, isn't it?
Largely, yeah. There's a whole business around it. Video gaming, trend or fad?
Absolutely. That's going to be a trend that's going to take over. Absolutely.
And podcasts, trend or fad?
This one, absolute trend.
Thanks. Have you started a podcast yourself? It seems like everybody's starting a podcast these days, even celebrities.
It does, yeah. No, we too much data to sort out, I'm afraid. So that's we're not in the business of podcasts, although we love them. But unfortunately, too much to do back on the computer. Well,
this has been great. Thank you very much for your insights, and I've really appreciated your time. Is there a way for people to find you, connect with you, learn more about your business?
Come to CryptoCompare.com, which is our main website. But perhaps for the more institutional clients, data at CryptoCompare is our where we show our true offerings, from indices across to order book data sets to historical data dumps, etc. So that's really where we can show our true offerings on fundamental data that you need if you want to get access to this digital asset ecosystem.
Fantastic. It's been an exciting start of 2021. Really fortunate to be able to have you and talk to you about CryptoCompare and pricing of cryptocurrencies. And in fact, kind of given the market environment around Bitcoin in general, I just want to announce to listeners, over the next few weeks, we'll be doing a special Trends with Benefits series on Bitcoin itself. So a few different series covering from the very basics. What is Bitcoin, to investing in Bitcoin, to the future of Bitcoin development. So be on the lookout for that in the coming weeks. And thank you for tuning in to another episode of Trends with Benefits.